Hello, everyone. Today I will be talking about a seller buy down. And this video will actually make a little more sense for you if you want some background at least on if you watch my previous video regarding points and lender credits. That'll just show you what discount points can do to your interest rate and of course then your monthly payment. So that'd probably be a better video to watch first, but if not for now, we'll just get into this. So a seller buy down. The whole point of this mortgage strategy is basically to find common ground between a seller and a buyer in a negotiation. Oftentimes in transition markets such as what we kind of are going through right now, that we're shifting away from a seller's market towards more of a buyer's with rates going up, there are a lot of price reductions going on. So price reductions generally are kind of considered cost to the seller. It's unfortunate, but it happens. So it's unfortunate on their end, great for buyers. So I want to show you again what you can do when there's a price reduction on a home to either make your offer more competitive as a buyer or to just overall make your mortgage situation better. So the scenario in question here is we're just going to start with a $1.2 million purchase price, 20% down. So that's a $960,000 loan amount, which gives you a payment of here, $7,283 at a 6.125% rate, for example. And our cash to close is $261,000. So if the home is sitting on the market too long and we need to drum up some more foot traffic, then a listing agent or a seller might consider doing a pricing reduction. And let's assume here we're looking at a $40,000 price reduction, which is, I believe it's about 3.33% in this case. So with that being said, our loan amount goes down to $928,000, assuming the same down payment percentage. With the same rate, our payment is now $7,046, and our cash to close lowers because of the decrease in the down payment to $253,000. So a lot better situation for the buyer. But if you're competing with another buyer, you want to make your offer a little more attractive. You might consider using this price reduction to incentivize the seller instead to do a seller buy down. The way you would do that is by offering the original listing price of 1.2 and getting a 3 percentage point credit to lower your rate. That would roughly lower your rate to 5.375, for example, and this would effectively lower your payment to $6,800, which is another, looks like $220 lower than what it would be the $40,000 price reduction. So why would a seller do this? One, they get their original listing price. Two, it costs them less money. Like we mentioned, at the 1.16 million, you having a cost here of $40,000, and with the 3-point buy down, they are only incurring a cost of $28,000, basically $29,000. It's 3 percentage points of the loan amount up here. So it ends up being about $29,000, which means the seller is saving about $11,000 in this situation. So that's why they're incentivized to give you that money at the original listing price. Now, the only con, I guess, would be here is that the cash to close is still the original amount. So if a buyer does like the cash to close with the price reduction, we actually have a strategy that we can show for that. The 3 percentage point credit is flexible. You can use it, in whatever way you kind of please. So what I'm going to show here is using half of it to lower your interest rate and payment, and the other half to lower your closing costs. So if we compare the $40,000 price reduction, payment and closing cost, to using that 3-point seller credit with the original listing price, then we can lower the rate still to lower than what we had before. And our payment about the same, right? We're talking about a $6 difference here. It's, for our purposes, just the same payment. And our cash to close is actually about $5,000 lower than what it would be in the case of the price reduction. So the down payment is still the same amount, but we're using the half the $28,000 or $29,000 to subsidize our cash to close. So the whole point of this is really just to show that we can be flexible with what we use those points towards. And it's just going to depend on your specific situation, what makes sense for you and what makes sense for the mortgage you want to have. And last point here, again, like I mentioned, the whole point of this video is to show you how powerful a seller paid buy down is. because a lot of people don't know that a dollar put towards a buy down is generally worth 3 to 4 times as much in a price reduction. And what I mean by that is this down here. So with $29,000, we can get this payment, right? With a seller buy down, $6,825. So how do we get that payment without without using a buy down, with really just reducing the purchase price? And that's would be is right for that payment, $6,800. We would need to get to a purchase price of 1.1 million, basically, using the same down payment percentage and same original rates here. What that means is this would be about $94,000 cost to the seller in comparison to a $28,000 cost, which, ballpark is about 3 times, a 3x difference there. So that's all we mean on the seller's perspective. It makes more sense to do the buy down, and they're more likely to do the deal at 1.2 than at 1.1. So there's just different ways to negotiate this and really to just set up your mortgage. So I hope that you can kind of figure this out, and I hope this makes sense. If you have any questions, please let me know. If you want to price out your own scenarios, then of course let me know as well. And I hope that everyone has a great day. As always, please like, comment, and subscribe, and I'll see you guys next time.